The Shiba Inu community, including the developers, is pushing the Shiba Inu ETF narrative and expressing bullish sentiments. Wall Street is knocking on Shiba's door, and the excitement is palpable. But what if I told you that this is a huge trap, and there's more to this story than meets the eye? You should not fool yourselves. This is an exclusive video you will not find anywhere else on the internet. Make sure to stick to the very end because we still have chances to save ourselves from terrible consequences. But what am I talking about? Let me explain. Disclaimer. In the wake of the recent approval of the Bitcoin ETF, the cryptocurrency community has been buzzing with speculation about the potential for similar developments in other projects, Shiba Inu included. Lucy, a member of the Shiba Inu development team, recently tweeted about the prospect of a Shiba Inu ETF, eliciting positive sentiments within the Shiba Inu community. But hold on a minute. Don't fall for the hype. We need to be cautious and think twice about this Shiba Inu ETF idea. The way Bitcoin ETFs have played out raises some concerns about how they could affect the market and the whole decentralized vibe of cryptocurrencies. So let's not jump into the Shiba Inu ETF bandwagon blindly. Take a step back and weigh the pros and cons before diving in. Consider the Bitcoin ETF as an example. Despite widespread anticipation that its approval would lead to a surge in prices, the reality is quite different. The price not only failed to experience an immediate positive impact, but also dipped, challenging the notion that ETF approval guarantees an instant boost. Yes, I understand that it is, as many people say, just temporary, and we will see the price pump a little bit later. But this is not what I'm talking about. Let's shift our focus to Wall Street. Wall Street has swiftly entered the scene, filing applications for Ethereum ETFs. And this is where some believe they need to be stopped from filing new crypto ETFs. While many anticipated positive outcomes, the reality is somewhat different. The approval has raised potential issues, particularly the concentration of Bitcoin in the hands of institutional investors. For example, BlackRock, a major player, quickly acquired a substantial amount of Bitcoin during a recent dip. This accumulation represents a significant portion of Bitcoin mining output, highlighting the potential concentration of this cryptocurrency among institutional giants. The Bitcoin ETF was approved just 1 week ago, and within this short span, major institutional players have already acquired billions of US dollars worth of Bitcoin. This rapid accumulation positions them as major whales in the market, wielding considerable influence and control. The speed at which these institutional giants have entered the scene underscores the potential impact of their presence on the cryptocurrency landscape. Now, let's shift our focus to additional concerns raised by the BitMEX crypto exchange founder regarding the potential negative impact of ETFs on Bitcoin. He has expressed apprehensions about the vacuum effect created by spot Bitcoin ETFs. According to him, these ETFs are designed to accumulate assets and store them away, potentially in the hands of major asset managers. He warns that if issuers hold a substantial amount of Bitcoin, investors might switch to alternative financial products instead, resulting in reduced transactions on the Bitcoin network. This, in turn, could diminish the incentive for miners to validate new transactions, risking the health and vitality of the Bitcoin network. He further envisions a scenario where major Western and Chinese asset managers could end up holding a considerable portion of circulating Bitcoin. He emphasizes the risk that this concentration poses to the decentralized nature of Bitcoin, raising concerns about the potential consequences of such a shift in ownership dynamics. Now, let's turn our attention to the possibility of a Shiba Inu ETF in the future. If approved, it could signify an immediate takeover by Wall Street giants. This potential scenario raises concerns about the control and influence these financial heavyweights could exert over the Shiba Inu ecosystem. The fear is that such a development might compromise the decentralized nature that has been integral to the Shiba Inu community. Remember that the Bitcoin ETF being on the market for just 1 week already created billions of dollars worth of whales. The speed at which these institutional giants have entered the scene underscores the potential impact of their presence on the cryptocurrency landscape. And if you think that Wall Street needs an ETF to gain control, you will be wrong. They are already trying to take control over Shiba Inu. I've covered it in more detail in my previous video, but in a nutshell, in recent developments on Robinhood, there has been a substantial increase in Shiba Inu holdings. One prominent Shiba Inu enthusiast, Lola, has made a noteworthy claim supported by data from Arkham Intelligence. Digging deeper, Robinhood's institutional ownership plays a pivotal role. A staggering 73% of Robinhood's shares are in the hands of institutional investors like Vanguard, BlackRock, and ARK Investment. This institutional ownership raises questions about the potential influence these giants might exert on strategic decisions, including the notable accumulation of Shiba Inu. The significance of institutional investors having a large stake in Robinhood extends beyond ownership. The recent accumulation of Shiba Inu by the platform prompts questions about centralization. So here's the deal. When you find out that big institutional players own a whopping 73% of Robinhood, it's like realizing Robinhood operates in a pretty centralized way. It's not exactly spreading the power around. Now, the interesting part is that these big players aren't just holding onto Robinhood shares. They're also collecting cryptocurrencies from the limited selection Robinhood offers, just 15 out of over 20,000. It's like they're trying to grab a piece of the crypto pie, and that raises some eyebrows. It makes you wonder if they're aiming to have more control over these digital currencies. The whole scene becomes even more intriguing when you think about how few cryptocurrencies are listed on Robinhood compared to the vast number out there. It's like these institutional players are strategically making moves to influence the ones they've got their hands on. But here's something very important. The decentralization is very important for Shiba Inu community and is always praised by the lead developer, Satoshi Kusama. You see, decentralization is like the heart and soul of the Shiba Inu community. It means that no single big player has too much say or power. The community believes in everyone having a say, and it keeps things fair for everyone involved. Here's why decentralization is so crucial. It prevents power from being concentrated in the hands of a few. It aligns with the core values of Shiba Inu, ensuring a level playing field and giving everyone a stake in decision-making. But here's the catch. There's a clash of ideas. Big companies and rich folks often love having a lot of control because it makes things stable and predictable. They can make decisions without unexpected twists and turns. On the flip side, the Shiba Inu community sees things differently. They want the power spread out, shared among the many, rather than concentrated in the hands of a select few. So there's this ongoing clash between big companies wanting more control and the Shiba Inu community fighting for decentralization. It's like two different worlds colliding, each with its own set of beliefs about how things should be. This clash is shaping the path forward for Shiba Inu and testing whether it stays true to the original spirit of cryptocurrencies. So, what does the future hold for Shiba Inu in the vast cryptocurrency landscape? That's the big question on everyone's mind. Here's a thought. Pushing the narrative of a Shiba Inu ETF might not be the smartest move if you're all about decentralization. Sure, it could give the price a boost in the long run, but there's something special about Shiba Inu's organic growth without the need for an ETF. We're still at the beginning of this tug-of-war, and guess what? At this point, the Shiba Inu community holds a lot of power in its hands. Let's not forget the core values that make Shiba Inu what it is, especially decentralization. It's like the heart of Shiba Inu, and people should do everything they can to preserve it. Share this video with as many people as you can because it's crucial. The more people who know about what's happening and the foolish Shiba Inu ETF hype, the better our chances of keeping institutional investors from taking control over Shiba Inu. It's a battle, and every share counts in the fight to protect Shiba Inu's values. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you are curious to find more, then click one of the videos you see on screen. And with that, we come to the end of this video. If you enjoyed the video, then please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, as it was already mentioned, please share this video to as many people as possible. Let's get this news out there.